Welcome back to this video. In this very video, I'm going to be sharing with you the breakdown on how I took those trades. I cannot definitely complete the strategy and everything in this video, but I'm just going to be explaining to you what I saw before taking those trades. And also, I'm going to be creating another clip, so make sure you stick to the entire part of this video, because at the end of it, I'm going to be revealing to you what a lot of beginners traders do not understand about forex trading. The honest truth is, if you are sitting on your laptop and that is when you only get to make money, there's a limited amount of money you can make from the charts because your time is limited, and secondly, the market is purely unpredictable. So make sure you stay to the end of this video because it's going to be an entire clip dedicated for that alone. So let me just get to my laptop quickly. Let me explain the trades I took this week for you guys. So let's just go to the first one. Now, the very first one, how I was able to cash this trade was very simple and easy. I saw that this zone here pushed the market to the downside with enough momentum. And now, if the market is more likely to come back to this area, this same zone had a better chance and a higher chance of pushing the market downward. So the question is, how did I get to know my area of stop loss and my area of entry? Now, if you have been trading and you have been observing every single trade you take, you will notice that if the market is coming to create a double top or double bottom and the market consolidates, which means the market does something like this around that level, it means that there are a lot of liquidity above that your double top or below that your double bottom. So the market is more likely to first push to the upside with enough momentum to take a lot of traders out, then before coming back to the zone. So I think I answered that question. Now the second question is, how did I know the area I should put my take profits? Now if you take a better look at the market, all you are seeing here is basically a liquidity, basically a trend line liquidity. Now what a trend line liquidity means, for some of you don't know, is that when the market is consolidating and creating a trend pattern, you can see that it's consolidating towards the upside, yet consolidating towards the upside. So the area I put my take profit was for the market to come and sweep out all this trend line liquidity that you are seeing here. And because there's also a fair value gap at this level, so I put my take profit there. Now this trade, I was also predicting that the market is going to buy from this level, but for this particular one, the market actually took me out before going massively in my predicted direction. Now you can see this would have been 11 risk to reward trade. Now this was a 12 risk to reward trade. I'm going to post the before and after for you guys to see. Now for this other trade, which I did a stop loss on this trade, what I was basically seeing is that after a change of character, I brought down to the 5 minutes time frame. You can see I'm taking some trade, a lot of trades. I'm going to explain all of them to you. Now after a change of character, the market, this was the second pullback. The first pullback the market made before going to the upside. This was the first pullback before going to the upside. So my analysis was that this would react as a inducement area to the market. We go down to the 3 minutes time frame. Now if you go down to the 3 minutes time frame, after the market changed character at this level, this was the first pullback. So I was anticipating for the market to come and take, as soon as it come down, I was anticipating for the market to fill this fair value gap. Right? But then the market came, it tapped my entry, it moved a little bit in my favor, and then hit my stop loss. So let me go over to the next trade, which is this one. Now, how I took this trade from the 3 minutes time frame. Go to the 3 minute time frame. I'm also going to post the before and after of every trade you see here. How I took this trade was simple. Was that the market came down, which means the market came down to grab liquidity of the sell side liquidity, and then it moved up. As soon as the market changed character at this level, this was the first pullback before the impulsive move, right? So what I did was that I went down to the 3 minute time frame. Now in the 3 minutes time frame, you observe that there's a fair value gap here, and this was the last candle before the impulsive move to the upside. So this pullback of the upside, I took that as my inducement level, which is IDM. I mostly don't identify those words in them because I already know what they are, and because I'm the one analyzing the chart, I already know what they mean. So I took that place as my IDM, which is inducement, and then I took this place as my entry. Then the market just came, tapped me in, and moved in my direction so easy. So this was a 9 risk to reward trade. Now for the fourth one, what I saw was also the same thing that I saw in the previous ones. So I was planning on taking my entry from this top here. But the market actually missed my entry. So after missing my entry, I was looking for another place to take another entry. And you can see that this was the lowest point of the market. This was the lowest point of the market, right? So this was the lowest point. So as soon as market came down to, now remember that before now the market is already in a downtrend because the market has changed character at that very top. So the market came down to grab this liquidity. Now as soon as the market grabbed the liquidity, I observed that where is the next place the market is more likely to come before going to the downside. And if you take a closer look at it, you can see that this is the next place. Let me go to the 3 minutes time frame. Now in the 3 minutes time frame, if you observe, you must have noticed that I basically use the same strategy for all trades. So in the 3 minutes time frame, this was the lowest point of the market. As soon as the market changed character, came down, this was the first pull up. This was the first pull up of the market. It was the first pull up, and then this was the area the market changed character. So I used this first pull up as my inducement and this place as my entry. I put my entry in between. So I think around that time the market was around this level. So the market came. I missed second entry here, but I just waited. I left my entry there and every rat in there. But then the market actually came back to tap me in before going down in my predicted direction. And the funny thing is that I have not dropped this trade, any of this signal in my Telegram group, but I always update them, telling them that I have this setup, that I took this trade on gold, I took this trade on BTC, I'm going to drop a signal. But the very signal I managed to drop, which is, I think this signal, the market hits my stop loss. Imagine after catching so much trades, and then the very one you get to drop for a community for them to also benefit from it, the market hits my stop loss. It was really, really painful, not for me though, but for them, because I think I have been catching these winning trades, and the very one that caught with me just managed to hit stop loss. The honest truth about trading is that there's a limited amount of money you can make just by sitting on your laptop every single day and taking trades. And because the market is really, really unpredictable, it even makes that fact more true. But a lot of beginner traders do not understand it, and this was also something that I did not understand. This is a year and a half now in trading, and as time goes on, I get to understand this stuff. You might have asked yourself that how do those traders, those forex gurus, your mentors, get to live those kind of lifestyle that you are seeing on social media? And that is what I'll be explaining to you guys in this very clip. Now what that is that they have different streams of income. but the only one you get to see, or the only one they allow you to see, is their Forex trading account. The honest truth is there's a limited amount of money you can make, just like I said, and your time is required for you to make that amount of money. So what do those Forex traders do to make extra money, and in fact to even make the most amount of money in their trading career? And also, you can also do one of them for your advantage if you are just starting Forex trading today. The very first one is creating content. You see that a lot of Forex traders and a lot of Forex mentors, they have YouTube channels and they have different social medias where they create content, and trust me, making money from content is a lot more fast and a lot more suitable than even making money from the chat. I'm going to tell you this right now. Of course, you need to have some kind of knowledge before you can start creating content regarding to Forex trading, and as well to attract a lot of beginners traders who then will now pay for your mentorship, which is number 2 way of them making money. But first, let's just stick to the very first one, which is making content. Now, you don't have to have all the knowledge yet in order to make content regarding to Forex trading. If you are, let's say, starting trading today, you can make content on that and then share with the little audience you have. Eventually, people are going to love to follow your journey to see where that's your trading journey could possibly end. So creating content is one of the most suitable and sustainable way to make money, and then you can then take those money you're making from content creating to fund your account. So that is number 1 way of your Forex traders, your Forex gurus are making money online. They're not going to tell you this on social media, but trust me, if you are making content and then people love watching your content, there's so much money you can make just by creating content alone. So the number 2 thing of which I said in the earlier video is by selling mentorship. Now trust me, the honest truth is that there are lots of fake Forex gurus and fake Forex mentors out there who literally sell you rubbish for $500, $200 as a mentorship. I mean, those things they are teaching you that mentorship, you could literally see them and get them elsewhere like YouTube. And trust me, there are lots of fake Forex traders out there. Trust me, getting into the market, and after I've been trading for a year and a half now, I understand how hard it is to even make money from the charts, how difficult it is to make money as a trader, and regarding to the time it's going to take you in order for you to have those skills required to make this money. Now across the year I started trading, I've blew a lot of accounts and I've traded a lot of prop firms as well, of which most of them are fake. I'm going to be telling you that later on in the video. And though that I've not paid for any mentorship yet, I literally learned how to trade the Forex market from YouTube and from other experiences. From my own personal experience, I've been able to develop a strategy that worked for me fine. Now the number 3 thing that Forex traders do to make extra money in their pocket is by promoting brokers or promoting prop firms. Now I'm not saying that doing these things are bad, but just make sure that you are promoting the right thing. Forex traders promote different brokers, and also they have affiliate links with them, of which I also have, that by you clicking on that link to create a brokerage account with them, the Forex traders will then have a commission from every single trade you take. But now, no Forex guru or your mentors will not come out here to tell you this, that is making money from brokerage, but is only going to sell you the idea that is making money from the chart, of which is not true. And a lot of beginner traders, they fall for this most of the time, of which myself, I will fall for this most of the time when I started trading. Now they also promote prop firms. The prop firm is a lot more worst because there are a lot of fake prop firms out there. I've traded a lot of fake prop firms that at the end of the day they just end up scamming you and ripping you off your money. Some of the co-founders and the founders of those prop firms are in Nigeria here, some are in Africa, and though we Nigerians beginner trader really felt disappointed at some of them, but to me I love those persons personally, not because of the fact that they scammed us, because I was part of the people they scammed, but I just love this person personally, regardless of the fact that what they did was totally wrong. I mean, it was totally and honestly wrong. But these are some of the ways that forex traders make money, and even a lot more other business that they make money from. But the honest truth is, they will never come on social media to show you this. They are only going to sell you the idea that they are making money from the charts, of which is not true. But they have different businesses idea, and then they have different streams of income that they are making money from every single day. So if you are getting into forex trading, my advice for you, which is the first and most easy part of which you can do, is starting up a YouTube channel. If you set up a YouTube channel today and just post the little ideas you have and how you are growing on your forex journey in the next 1 year, 2 years, people are going to love you, and you are going to create a fan base on that YouTube channel. People who have seen you growing through those forex journey and those stress and those every other things. Before you know it, you start making insane amounts of money from trading. My YouTube is not monetized yet at the time making this video, but I'm just telling you that you can set up, this is what you can set up as a different streams of income that you can use for a start to fund your account, to purchase premium account, and then you can even grow it bigger to even making a lot of money monthly or yearly basis from your YouTube channel. So if you are getting into trading, do not have a mindset that you're just going to, for that the chart is all you need. No, it's not true at all. You also need different streams of income, because the business you are in is literally money business. It is capital based business. Whoever has the most amount of capital wins a lot more. And you might see traders turning $10 to $5,000, $100 to $1 million. The honest truth about that journey is this: they have a lot of $100 to lose. If you only have $100 owe and behold, and you blew that $100, it's going to take you a lot more pain, because you will honestly regret taking that $100 and blowing it. But if you have different $100 in different accounts, you can literally blow a lot of it, and then it does not really matter. After each blow, you just get to deposit again. So have this at the back of your mind if you're getting into trading.